Well, g'day there friends and traders right around the world. Thanks a lot for joining me on this pre-market update as we move into Tuesday's days worth of trading. First of all, I just wanted to speak about a couple of signals which are taking place on a select few individual stocks, and also just give you a recap of what the market is doing also. First of all, I'd like to start with Google, because Google on Monday, it more or less hit our target all the way up here at $1,000 per share. You can see on the high of my candlestick up here, it came in at 1,046, 1,000.46. You can see my target on this is 1,069. It left us with what we call a shooting star candle. So this is the first reversal signal more or less right next to our target that we've identified on Google. So this is a very good opportunity for you to get out if you were in at 952 or even at the second entry here at $959 per share. This is more or less the end of the move, which is beginning to take place in Google, and I want you to be aware of that. Now, continuing on with this discussion, Apple was an interesting stock that I spoke about over the weekend. The reason why I use the term or the word interesting is because this is one of the few stocks which is actually setting up that of a bearish reversal. This to me looks like that of a bear flag. So if you pay attention to what I'm drawing on the screen, generally what happens is once you break below a macro support area, oftentimes we will come back up, we will retest the pivot. This is essentially what is happening right now on Apple. So these blue lines, they're meant to be apples, which are highlighting the significance of around this 155 pivot. What we did on Monday was that we overshot it and we were left with that of a doji candlestick, almost that of a gravestone doji. Now, this doesn't necessarily mean that of a reversal, but it certainly fits the picture or the chart pattern of what I assume to be that of a bear flag. You can also see on this bullish bounce, a lot of people, again, are becoming a little bit, I should say, optimistic about this current movement in Apple. I mean, it did sell off to about 149, and it's trading at 155. Again, a lot of people jumping into Apple bullishly. However, if you pay attention to volume has been trailing out, or it's been trailing down as this bullish bounce has continued, which is again another very clear signal that it wouldn't come as a surprise if Apple was to roll. So you can see my trigger on here. It's sitting at about 151. For a sort of an illustrative example, or for an example, I would encourage you to keep an eye on Apple over the next 2 weeks worth of trading. And again, it shouldn't come as a surprise if we see this roll over and begin to move at least back down to 149. If not, it may come all the way down to 143. Now, you might be asking yourself the question, how can you be bearish on Apple if the markets themselves are overwhelmingly bullish? And yes, I mean, that is a very valid point. The markets, again, are still tremendously strong. Even considering Monday's day's worth of trade, you can see that we more or less finished with a spinning top candle. We closed down inconsequently, immaterially, really on the Dow Jones, down 12.6 points, not the biggest of days. Again, on the S&P 500, that of an engulfing candle, down 4.6 points. And on the Nasdaq, you can see this is what we call a bearish piercing pattern. We gapped up, however, we closed into Friday last week's trading session. Now, this doesn't necessarily mean a reversal. It just essentially tells us that the markets themselves need time to slow. I still have higher projections on the markets moving forward, but at the same time, if you pay attention to the ADX and the CCI, when the ADX turns down, you need to pay attention to this. At the moment, on the Nasdaq and also the Dow Jones, the ADX is still elevated. It still has a positive angle on the ADX. It actually hasn't faltered. However, if we see any continued weakness into Tuesday's trading session, you should see the ADX first of all begin to turn down with the S&P 500. If this is to happen, and obviously it hasn't happened yet, all I'm doing is simply recapping Monday's day's worth of trading. Well, that is going to give first of all, evidence that the trend itself is slowing on the overall markets, and it is setting up that of the next wave of consolidation, which is going to happen or take the format of a sideways market move or that of a controlled pullback, or it's going to be the top of the market moving forward. Now, again, I'm not really espousing or supporting the idea that we have seen the top or the top has been put in the markets, but in terms of the trend, which is still very much so strong, solid, healthy, it looks as though we are transitioning into a little bit of a slowdown. Now, we've made some tremendous trades to really speak humbly at the moment. Looking back at some of these entries, whether or not you want to call it on the diamonds, say for instance at 22 or even as low as 21,942, you can see all these secondary and third sort of entries over the months of August and September. It has been a tremendously healthy and profitable period for a lot of people who've opened up exposure on the call side of the market if you are trading those ETFs underlying the market. But what I'm saying right now, and again, in in collection with the majority of our stocks, a lot of these stocks at the moment are coming back up and they're actually running into resistance areas that we have noted in the past and are continuing to hold as resistance. So you can see even in the format of COP, it's pulling back. In the format of CVX, you can see how it's already moving sideways. The same is true for Caterpillar. You can see how we're just placing in more or less stair-step patterns as the trend continues. The markets haven't moved into the sideways move yet, but I am expecting them more or less by the end of this week, if not surely by next week, to actually be in that sideways market move. And again, to confirm that, look for the ADX rolling over. Very important that you understand this as well. Goldman Sachs again running up into that pivot, pulling back. Not all that much of a surprise. IBM still looking healthy. We haven't been triggered out of this. Stop is at 146. We closed up 91 cents on Monday. If you are in the trade, I would more or less move it up even higher, and I would place it literally pennies below the low of both Friday and Monday and just lock in that little profit there. Netflix is temporarily breaking out. It did have a little slowdown on Monday. Pay attention to the pivot at about 190. Also Tesla trying to get that wave rotation back up into the top of resistance. I assume we're going to get there, but it is going to be a trade very similar to that of Amazon and also Google, which in the past really 2 weeks has essentially just gone berserk, and we finally hit more or less both of our targets. 980, 984, but then we were about 20 cents away from hitting our ultimate target up here at around that psychological round number at $1,000 per share on Google. Pay attention to Apple though. Apple, very important. Bear flag. Gravestone doji, if not just a doji candlestick, almost out of a shooting star too. Bearish reversal at a pivot. This looks to be essentially setting up a rollover, and I don't want this to come as a surprise to you. So on that note, everyone, have an enjoyable day's worth of trading on Tuesday. I'll be back with you to recap the market in a couple of hours' time. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.